I think the first thing you look at, Tom, is first the credit. Is there a move in credit if they issue bonds? Not every software company obviously issues bonds, but that's the first place you start. As we always say, the credit folks are the most intelligent in the room, and so they want to get paid back first. So you look for the move there. Second, on the equity front, how diversified is that revenue stream? Think about a Microsoft. I mean, they traded more on Azure growth rates than they did on necessarily their maintenance software sales. So, but if it is a more narrowly focused software company, it's about, look, how disrupted might they actually be, and what are the trickle effects to other areas? S&P, actually 10% of the index, Tom, is software, so it's a material issue to be sure. 10% of the S&P 500 is software and software related.
I didn't know that.
Yes.
So we got to pay attention to this story, I think.
That's right. It's all over. Oh, I don't know. Alexa said, Tom, software. That's today's word.
Yeah.
That was the 3 a.m. meeting. Continue.
So Eric, I mean, we've seen really in 2025, we saw the U.S. equity markets did very well, but rest of the world, much of the rest of the world did even better. And I think a lot of folks are asking, was that just kind of a short-term trade, sell America, maybe buy some other stuff, or is this a bigger, longer-term trend? Maybe we need to be thinking outside of the U.S. for opportunities.
Yeah, Paul, I think that's very consistent with the thought process that we're having in lots of our competitors. I think there's really two parts to the story. First is currency. The big move last year initially was the drop in the dollar. It's called 8-10%. But then we actually saw more attention paid to the value unlock of countries like Japan, where you're seeing a breakup of big companies. You're seeing more shareholder friendliness, more corporate governance advancements, which are actually driving activity from areas that probably parts of the capital market that had not been as interested in Japan. Second, with respect to Europe, the amount of stimulus plus some level of labor mobility, as well as an unlock also on the large company side, again, breakup of big legacy companies, that also is a follow through. So we are sitting both in trade weighted dollar terms as well as the DXY on multi-year support for the dollar. And again, I think that there is a leg to go up. Again, we're favorable on the international equity side, both on currency, but also on some of those value unlock catalysts.
Your Northern Trust website, within the propaganda of marketing for where wealth goes next, an advisor for your whole family. That immediately tells me it's a minimum 3-year perspective. So are you advising, within the umbrella of Northern Trust Chicago, are you advising that we're in a bull market, get used to it, and manage the emotion of the day-to-day fluctuations?
Yeah, that's a very apt description, Tom. Northern Trust, and I'm new to the firm, and they've had a great franchise on this more goals-based.
Do they have good Blackhawks tickets? That's all I care about.
We do. We'd come on over. We'd love to have you, especially if they play your Sabres. We'll make sure you're front row center.
Sabres are killing it. Lindy Rupp is just... They're like in last place. Oof. No one on the team is over 21. Half of them went to Colgate. Yeah. It's just amazing. Eric, continue.
So I think, our process, Tom, to your point, is being very goals driven. That's been the way that we've said, hey, look, if you're a client and you got to pay for tuitions, we think of it like a pension fund looks at liabilities. And so that's been a way to take a lot of the emotion, if you will, out of it. That being said, the tool set that we have to use for clients, including private markets, my colleague Lynn Kostakis had an outstanding alternatives symposium in Chicago a couple weeks ago. You can get great rates, Tom, in Chicago hotels right now. We had 500 partners in Chicago talking about the tool set. So again, we think it's a broadening tool set with respect to achieving these goals. Again, bull market in public equities, also lots of opportunities on the non-traditional side as well.
You guys are overweight real assets. What does that mean? What are real assets to you guys?
I think a couple things. One would be private natural resources, which is a oft overlooked component, Paul, of the capital market spectrum. We also like natural resources with respect to oil producing companies as well as distributors. We think that, again, the world as it's become more fragmented, it's tough to get feedstock from Cushing, Oklahoma to the north of Europe. And so being involved in those transmission mechanisms we think are important. You're getting contracted revenue. Again, this is revenue that is adjusted for inflation, but also has a 2 to 3 year to 5 year type of contract associated with it. So we like that, not guarantee of cash flows, but the assuredness, if you will, of the contract for us is a good way to have risk adjusted plus inflation adjusted returns for clients.
Fixed income had a solid 2025, high single-digit returns. you guys are underweight fixed income. What's the call there?
I think twofold. One, spreads are just ultra tight.
Yep.
It's a tough place in corporate, and even if you move down a little bit on the credit spectrum, there's a little less interest there. Again, a lot of our clients have taxable capital, and so munis are still a place where we want to be. We think that state health, broadly speaking, is positive. That being said,
even Illinois.
Yeah, No, there is. And again, you think about California, Illinois. There are lots of different revenue sources that are available. So, us paying attention to the mechanics and the dynamics of the muni market, very important. But again, we just think there's better opportunities elsewhere, but would not be moving away necessarily. Right. We also think that the tips market is still a great place to inflation hedge for clients as well.